Dawson is a global asset manager focused on providing customized, innovative, structured solutions to the private equity market. We are providing bespoke solutions to allow people to accelerate liquidity on their private equity portfolio, but keep the upside and the flexibility. It's multifaceted, it's bespoke, it's customized, and it can be provided to both LPs and GPs. We focus on providing a new tool in the tool set for LPs that are looking to tactically reallocate their private equity portfolios. We're looking for to provide them a solution that at the place of selling their portfolio or putting debt on their portfolio, we're looking to do something in the middle. So as an example, at the place of selling your portfolio at 85 to 95 cents on the dollar, we'll provide you with 67% of the value of the portfolio. We'll take 100% of the cash flows from that portfolio until we get to a minimum multiple, and then we're going to split cash flows. And in doing so, what we do is we enable the LP that is seeking to generate liquidity on their private equity portfolio to do so without crystallizing a discount, without foregoing future proceeds, and without timing the market. We believe that the secondary market is vastly undercapitalized, that there is much more pent-up liquidity in the market than there is capital to absorb it in the secondary market. Let's put some numbers around this. Since 2021, over the last 3.5 years, $275 billion got raised in the secondary market and $425 billion got deployed. I'm going to say that again. 275 raised, 425 billion deployed. That's 65 cents raised for every dollar deployed. And over the last 3.5 years, actually the dry powder has been shrinking in the secondary market. Let's look at the first half of this year. What you had was $34 billion raised and $72 billion deployed. So what we're finding ourselves is in a world where LPs find themselves over-allocated, where they have gone through a lot over the last 2 to 3 years. In 2021, their portfolio did too well. They started 22 over-allocated to private equity. Then public markets declined, compounding that over-allocation. Then distribute dried up in 23. And so they are looking for liquidity, and not only just liquidity for over-allocation, but liquidity for liquidity itself. Private equity, we all know, has gone through a drought of distributions. And so that has created some issues around portfolio allocation, issues that the secondary market can solve for, and issues that we can provide another tool in the tool set for LPs that are looking to temporarily reallocate their private equity portfolio, but keep the upside and the flexibility. Well, we've got a bold prediction that the secondary market could grow to $1 trillion by 2031, from $130 billion at its peak in 2021. That's a big increase. So how will that happen? Well, first, what we're seeing is that private markets itself is going to grow pretty substantially over the next 5 to 10 years. We've grown from $5 trillion in 2016 to $15 trillion today. Can that go to $30 trillion or $50 trillion? Bain puts an assumption at $65 trillion by 2031. Let's just say 50 trillion. If that's true, then only 2% of private capital has to trade in order for us to get to $1 trillion in the secondary market. So the real question is how is this industry going to get capitalized? And we believe that the continued interest from institutional investors into the secondary market and private wealth coming into this channel will help capitalize this industry. So time will tell. Will it get to $1 trillion by 2031? Let's see.